Hey everybody, hope everyone's doing well and had a good day. In this video, I'll do a brief review of the Emini 5-minute chart for Thursday, May 15th, 2025. And I kept some of the bars to the left from yesterday on the chart so we can talk about the context going into the day. And I want to go back to Tuesday. 2 days ago, we had a spike in channel bull trend. Yesterday, we had a horizontal trading range day, or you could call it a bear channel, but either way, probably a bull flag or a trading range. And then today, we gapped down and had a trading range open. And I thought the odds were, or at least the probabilities were, at least slightly favoring the bulls because of the bull trend before the trading range that we've been in. So I thought breakout direction favored the bulls, maybe by at least 5% for that reason. And we had a broad bear channel yesterday that started 2 days ago. I thought it's more likely breakout attempts of the bear channel line will fail and reverse up and test the bear trend line. And you can't see all the bars to the left, but this was part of the trading range or bear channel. And down here, the market was testing the bear channel line, attempting to break out below it and failing. So going into the day, we gapped down. The market rejected the gap. So gap down, bear breakout, but then immediate bull trend bar. It's a variation of big down, big up. It's a breakout below a double bottom. So also a variation of a wedge. And you can see we're opening at a measured move down. If you use the high close and low close of this trading range, the gap down was possibly a vacuum test of support, and the market reacted to it on bar one. Now the gap down was enough price movement for a second leg down, and we got it after the pause. You can call it a pullback or a pause on bar one, second leg down with 2 pushes, and then a fairly strong bull reversal. The problem is all of the overlap on the open, and then also it's a gap down, it's an upper trading range, lower trading range. The bottom of the upper trading range usually acts as resistance. It's basically the midpoint between what might evolve into a more broad trading range. And at this point in the day, I think by this bar, the opening range was about, I forgot exactly, maybe 30% or so of the average daily range. And because of that, I thought the range of the day would expand and possibly double and maybe even triple. And because of what I said about 2 days ago, the spike in channel, the trading range, if we are going to get a breakout and a measured move of the opening range, and you think about the context, we're at the bottom of a bear channel or the bottom of a trading range after a bull trend. I thought the odds were slightly better for the bulls. We'd get the bull breakout. So because of that, it might be reasonable to look for an opening swing to the up direction. As far as opening swing for the bears, maybe below this bar, but it's an inside bar following fairly strong micro channel, second leg up likely. So a second reversal, second entry short would be better for the bears, but they got a bad signal bar and lots of overlap with the prior bars here. At this point, might be a wedge double bottom. It's 2 legs down, 1 pullback, 2 to the bottom of a trading range. It's also nested, maybe leg 1, deep pullback, leg 2, and leg 2 subdivided into 2 pushes. Either way, you're testing support. And this signal bar, not great for the bulls, but it is an opening swing candidate. If you want higher probability, you can wait for a bull bar closing near its high. So as far as buying here, maybe not great, but really no reason to sell here. If you're selling this low 1, bear breakout, pullback, low 1 short, you're at the bottom of a trading range. and you're trading leg 2 for leg 3. So leg 1, leg 2, leg 3. And then you get the bull bar closing on its high. So an opening swing here, you could buy above this bar, buy the close, buy for any reason. You might get some profit taking here. This is a gift bar. It's a big bull bar. It's 3 legs up, and we're approaching. We have yesterday's close and other resistance above. But if you think about the approach and the reaction to the resistance level, is this a good bear bar to sell? No, of course not. It's a low probability sell, which means traders who sell below the bar or sell to close are probably going to lose money. And because of that, it's a bad stop order sell. It's a good limit order buy. Everything has an opposite. So strong breakout, and this would be one of those times when the market breaks out above a bull channel line. It's a lower probability event, but even though that's generally let me back up. This is generally a 25% probability for the market to break out above a bull channel line and then accelerate into an even stronger trend. But in this case, the bigger picture context supported it for the reasons I said earlier. Also, in this green highlighted box, these are the 9 or 10 bars. I forget how many bars it was, maybe 6 or 7 bars. These are the bars that are in a strong breakout that kind of stand out from the rest of the bars on the chart. You'll hear Al talk about the 40-60 band, and that most of the bars on any chart are hovering between 40 and 60%, and only about 5 to 10% of the bars on any chart are in a strong breakout where the probability is 70% or higher. And here, it's a good example of that. Today, we have an opening trading range, 40 to 60 through here. Strong breakout, bears not making any money, buy the closed bull trend, and then we start getting more two-sided price action here. Still, we favor the bull direction, but this would be the start of the channel, and the channel evolved into a bigger trading range. So trading range 40 to 60, strong bull breakout, maybe 70% or higher, and then through here back to 40 to 60%. Up here, this is another example of a bull breakout attempt of a bull channel line. So we have a bull breakout breaking above this channel, strong bull trend. First reversal attempt, it's a pullback, second leg up, pullback, third leg up, and breaking above, or attempting to break above the channel line. It's a parabolic wedge. It's a tight channel. We know it's a breakout on a higher time frame, and because of that, once our expectation, one reasonable expectation to have for a parabolic wedge in a bull trend is you get a minor reversal and then trend resumption. And this gets into kind of, I don't want to get off the rails too far, but I think it's interesting. I was watching one of Ali's PTM sessions the other day, and Ali was talking about trading beliefs and how we as humans are basically supercomputers, and our bodies and our minds are like the hardware, and our thoughts and beliefs are the software, and we get to program ourselves any way that we want. We can decide to have any software program we want. And I thought he was just putting it really clearly. That's exactly what we're doing when we're creating systems. We're looking at charts and we're seeing patterns, and we're trying to build robust systems that can be traded, on any time frame, any chart. We're looking for first principles and the fundamental truths of price action. And the reason I'm bringing that up is because what we have to do, it's kind of like we have two jobs. We first have to discover those robust rules or those useful beliefs, basically, we need to discover useful trading beliefs through study. And after that, we have to program ourselves to actually believe them and act on them. If you only do the first thing, then you might be a good chart reader, but maybe you can't trade. But once you program yourself to really have faith in the ideas, the beliefs that you're discovering, only then can you really act on the idea and actually trade. So this is an example of how can we have calibrated expectations for a parabolic wedge in a bull trend. Well, the first thing might be to gather maybe 30 examples of parabolic wedges in bull trends and see what happens most of the time. Is there a pattern? And after you do that, you might conclude that, okay, I've seen this before, and most of the time after a parabolic wedge in a tight bull channel, overall it's a bull trend, most of the time you get a minor reversal and then a breakout to a new high. And if you thought that, you would have had the correct expectation for what ended up unfolding today. Parabolic wedge, you expect at least a minor reversal, but because the channel was so tight, there's trapped traders below, there's buyers below, support below, and we test an area where traders got trapped, the start of this third leg, and then we rallied for a new high. But at this point, we already had a pullback here, a pullback, so we know that channels or trends get weaker as they progress. We have the strongest phase, the breakout, the spike, and then the pullback begins the channel phase, which evolves into a trading range. So here, even though it's a bull channel, when we look back at this, it's going to be part of the overall trading range. So we rallied to a new high, but only one close at a new high and then no follow through. Same thing happened here. One close at a new high, but no follow through. And maybe it's a nested wedge, 1, 2, 3, testing another bull channel line I don't have drawn. But we're also at a measured move up. If you take this measured move, so this is this high close to this low close projected down. But if you take this low and this high and put a measured move up, that takes us to where the market found resistance later on in the day. And this was a major breakout. So here, these are minor reversals. But this one potentially puts the market into a bear trend and certainly a trading range at this point, if not already here. In a bull trend, you typically don't get 1, 2, 3, 4, 5. Looks like a 5-bar bear micro channel. So if you get a 5-bar bear micro channel in a bull trend, it's probably not a bull trend at that point anymore. It might be a bear leg in a trading range, which gets followed by a bull leg in a trading range, but this is probably not a strong bull trend anymore. It's more likely a broad channel or a trading range. But at this point, this was a major higher low, and this bear breakout went below this major higher low. And because of that, at this point, the market is either in a trading range or a bear trend. It's making lower lows, possibly lower highs. They're hoping it's a trend line break that becomes a major trend reversal, and it was a good enough breakout to convert the market into a trading range. But as far as a major reversal into an opposite trend, we really hardly poked below these support levels. It would have been better for the bears if there were big consecutive bear bars and maybe getting below here. Even through here, you can count the pushes of momentum. We have range expansion and then contraction, expansion, contraction, expansion. So that's 3 pushes down to support. So if we also think about the bigger picture, we know it's an overall bullish day. It's probably a bull trading range day. At this point, we have a lot of information. We had a lower trading range, a bull breakout. Looks like we're getting an upper trading range. And the bulls were getting more shallow pullbacks. Just a pause bar here, very shallow pullback, relatively shallow compared to this. But for an opposite breakout, so in a bullish environment, when we get a bear breakout, we might get a deeper pullback. This was enough damage to trap traders up here, but because we're now testing support, the bears who sold up here may look to take profits, and the bulls may start to look to buy again. And because we have the 3-push pattern and a double bottom, a couple of reasons to look to buy. Strong bull breakout here, but look to the left and it's still a lower high, so big down, big up, big confusion. Probably sellers up here, second leg down likely, but second leg up likely, although the bulls may wait for a deep pullback to look to buy, and the second leg might be delayed. And then that's what happened. Bear breakout, deep pullback, delayed second leg, still went to a new low. And for the bulls, breakout, deep pullback, still went above that high. But overall, trading range up here. And that's going to be it for this review. So thanks everybody for watching, and I hope everyone has a good night.